Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer to help you keep you sane in these insane markets. While other gurus tell you what happened yesterday, I'm going to tell you what to expect today and what levels that you should be looking at so you don't spend all your time looking at the chart. I do all the work for you. Hey, if you like what you see, don't forget to like and subscribe. Head on over to Park Avenue Trading, get yourself a free ebook. You'll love it. Okay, let's get on with it. Sterling dollar. All right, so we have today like a catapult level at 129.70. So what do I mean by that? I mean that if the market can get above this, close above it, hold above this level, we're probably going to be attacking the next level of resistance. Let me move myself out of the way over here. Next level of resistance at 130. It's very close. It's a 30-point point. So what could happen at this level, and where you shouldn't really get shaken out, all right, or you should pay attention. If you saw that the 129.71 level broke and you're saying, okay, the marketplace is showing some more strength, what you should be looking for is a possible push. In other words, the big guys will come in at 130, right? And they'll sell this marketplace. They'll probably sell it down 40 points. So you're looking for something coming right back to where, the open is, 129.40-ish, maybe 129.35, okay? Where we start to get nervous about sterling dollars is there is the ultimate support point on the day, on this day only at 129.08 level. Okay, and the market has a possibility of basically coming back down to this level, and that would be a kind of would be a good scenario. Marketplace comes down, comes through 129, say 05, 129, the figure just 128.99, comes back above it. I would be looking to buy it with a stop loss, maybe 15, 20 ticks below the low that's created to try to get back up through this 129.73 and attack to 130. If we close against the 130, close above against the 130, the next level of resistance from way back in 2023 was 130.57. So the marketplace is, right now it seems to be bid, but that doesn't necessarily mean that it's going to go straight away. Now it could, but generally when markets seem this bid, they usually have nice retracements and kind of fake people out. So you just got to be cognizant of the levels of support, especially for today, the 127.09. Now the ultimate support for this thing is way down at 127.79. I don't think today is a day that's gonna happen. You never know. Every time I say these stupid things, I end up putting my foot in my mouth. So we have the ultimate top is, hang on a second here, or the ultimate target for this thing short term is 131.55. So if we're fortunate enough to get long at 71, and it just rallies and just keeps going, the ultimate top of this thing is 131.49. Now, let me go over some factors for you, okay, or measurements that I like to use. If I see the 129.71 go and closes above it, then all of a sudden the marketplace basically starts selling off. Generally, a marketplace normally, okay, can react down about 123 pips from that. Now, this is a number that statistically I found. On a normal reaction, you could get like 123 pips down. So if I take 1.2970 and I go 0.0123 out, you're looking at something like 128.47, and that's below the 129.07, and that comes in like right over here. Okay, and that's normal. That's a normal, natural reaction of a marketplace. Even it's basically, if it does do that, it's making a higher high, and it's made the most recent sorry, it's making a higher low, and it already has a most recent higher high. So therefore, if it does something like that, I would look at buying the thing back again above like the 129.07, and then the stop goes right around 128, say 40. Okay, now it's a little bit wide of a stop, but what you're doing is you're rebuying the strength. You know, everybody's going, oh my God, they're panicking, getting short, but then the marketplace turns, and then they panic and they get back long, and you're probably going right back to that 129.70 and probably higher above that 130. So that's basically, you know, a measurement. You put that down, 123 points. Now, if it's sterling yen, it's 1.23 big figures, you know, and same thing, you know, with sterling dollar, it's 123 points. Just don't forget to put the 0.0123. So you could go back and you could use that measurement, and you could see why, wow, there's some validity to that. Maybe it's not exactly 123 points. Maybe it's 136, 142, 121, something like that. But it's a really good measurement to use from tops or even bottoms, like where you can project up, okay, and find, like, say, a resistance point, you know. So I'm going to leave you with that. This is what I got for sterling dollar today. It seems to be bid, all right. It seems to be have started to break out of its really tight range. Technically, you know, it's bullish, but you know, I'm always cautious with that, because if I start seeing it, excuse me, turn around, okay, I'm going to be looking for that dip down to the 129.07 or even that 128, say 45 level, and then I'd say, oh, okay, now we got a real good chance to get this. You know, whenever we buy these tops, you got to watch, you know, what I call the close is king. And I go over this in Forex Confidant in the open indicator. I think it's really important. What I mean by that is, if I look back in this marketplace over here, okay, let's just say, for instance, we had a level right at this top, right? Or the market slightly closes above our level, just for shits and giggles. That's the king. The close is the king. The next bar that opens is the queen. The queen says no. The queen closes down below that important level. And then you could see that the marketplace tracks down, you know, and again, just using this, you know, as an example. I made it up completely. I'm not saying this is what happened there. I'm just trying to give you the example of how the close is king and the open's queen. And the king always follows the queen. That's my opinion, right? Or else the king's going to be in a boatload of trouble. So marketplace closes down. So let's say, for instance, you know, here's our level. The marketplace closes above it. The queen, she kind of messes around a little bit. She says yes. Okay. The next bar, you know, basically stays within the range of the queen, and then finally we get the breakup. So the important point I'm trying to get to you guys is that the close is important on the bar, but the following bar, is the follow-through bar, is really important. Okay, that's where a lot of people get messed up. Like, oh my God, it closed above that price, should go up. No, the next bar is really, really important, and that's the queen. So I look forward to seeing you in the next video. I'm going to be doing some classic technical analysis stuff, like Donchian's 9 and he used 5 and 20 moving averages. I'm going to go over that. I got some statistics for you with that, because I don't use moving averages, but a lot of people like moving averages, and I'm going to basically go over, you know, some historical testing with that. I didn't run the numbers, somebody else did for me, but they're interesting numbers, and they're quite shocking to you. And they kind of confirm my idea about moving averages and, you know, whipsaws that happen in moving averages. And really the only way moving averages work, and I'm digressing here, is if you have a very strong trending market in one way, then they work very, very well. If they don't, if the market's whipsawing back and forth, you're going to get cut up and give back tremendous amounts of money that you potentially made in a small trend. Okay. Please, if you like what you see, like and subscribe. Don't forget to ring the bell so you can get my next video. Look forward to seeing you. Cheers.